Good afternoon. My name is Scott Redler, Chief Strategic Officer at T3Live.com. Welcome to today's recap and look ahead. It's Thursday and we have another new high across the board. You know, I was talking on the VTF about 3 weeks ago when life was a little easier, or 2 weeks ago, whenever the first time the markets all made new highs together. Remember, the small caps made new highs, the Dow made new highs, the S&P made new highs, and I think maybe the transports. And everyone was like, oh, does this mean it's it? The euphoria is in. I think I was on Fox Business that day, and I was like, you know what? Maybe that means we have a broad-based rally. Maybe that means that there's enough participation that we could actually continue. I think we were somewhere around 21.95, to get to 22.40 or 22.50. That this is a good thing, not a bad thing, because last year when we tried, there was like 5 stocks or 6 stocks that was carrying the entire tape. But the cynicism and the sarcasm by everyone out there, whether the Trump rally or Trump this, Trump that, or hopeism. Just, got to take it down to the nuts and bolts of the charts. What's going on? What's the trend? Are we above or below the 8 and 21-day moving average? Are things extended? Are things tight? Can you be in tier 1 or tier 2? Or is it just time to avoid and, wait for another spot? Because we're getting into the type of market right now where the longs don't want to be long anymore, and the shorts are basically out of business and going home and breaking windows and kicking the dog, and I would be pissed off if I saw you kicking a dog because it's not their fault. It's your keyboard. But anyway, with all that said, let's get into the charts because that's what we do here on the recap. All in all, here's the S&P cash. We try and show patterns and show consistencies and examples. And, before our election, we were talking about this Brexit move and how this was pretty much what everyone thought would happen, but not this. And then what you could have evaluated was right here, this commitment to this post-Brexit reflex rally, showing you that people wanted to stay in stocks, took this out, shorts covered, 80 handles higher. Here is your pre-election sell-off. Nobody knew if it was going to be Clinton, if it was going to be Trump. Everyone in the world thought if Trump won, oh my God, the market's going to crash. This happened the day before Trump, and then this happened the day of, right here. We opened down 30 handles. I know we were down 100 that night. I tweeted about buying the S&P futures at 2050 at 932. You can look it up. People made a lot of money. Congrats. Anyway, this was your sharp move, and then this was even hard. But thereafter, 1, 2, 3, 4, 5 days of digesting above this move gave you the clues to get long. Don't be upset that you missed this part of the move. Don't be upset that if you were short and you didn't cover because we were below the 8 and 21 day and you had to get out here and salvage it. What you do is you evaluate and say, hey, I'm not going to miss the next move because this 2150 area should take us above 2193, which is the prior high. And that's exactly what it did. This pivot here was 2211. Then what do we do? Oscillators were plus 70. Came in. What do we do now? Retested basically the breakout right from here. Okay, we retested it. That's why on Friday, which seems like a long time ago, it was only 5 days ago, I sent a tweet to Redler All Access saying I am long the spiders, I am long the Russell, I am long an oil. Those are the 3 things I thought were a good buy in the pullback, that if the spiders went a little bit lower, that would be okay. I could buy the 21 day because I think that if we test it, we're going to hold it. I also was long the EWG calls, which is Europe. So anyway, here was your first few days, and then nobody knows what type of power you're going to have when you break above a level, but I guess this is how many people were shorted or mispositioned, because once we took out 2214, if you were short, you had to cover, because who knows where it's going to go. It could have went to 2300. Right now it went as high as 2255 or 2251. But it got above it, stayed above it, so you cover. If you didn't cover here, this is where you cover. If you were long and you're looking for a breakout, maybe you bought it, you sat firm, and here you go. So for today, what happened today? Today was a little bit of a tough day. It looks like nothing to on the chart, but a lot of guys were thinking 80-20 trade. What's an 80-20 trade or a Redler reversal? You get above 2241, put a high in, and then come in a little bit. They played with it a lot of the day, and then finally everyone that was short from here, here, and here gave up, and you had a little bit of a squeeze, and now chart's not telling you much, except for you have a 2251 is the high, you have the low is 2237, and we'll see if we build another flag to potentially hang here and go again, or retrace. That's it. This isn't saying be short, and this is where the 8 days. We're not that extended. You can't be all in long, but this isn't telling you take care for some kind of retracement. Plus the oscillator is plus 53. Here is plus 70, so it's almost. Small caps. Red Dog. You know what Red Dog did today? Red Dog tried to short the small caps. First time I've tried shorting the small caps from, since the day we traded below that prior low and I made a little bit of money. And I was like, you know what? I'm going to join. I'm going to try and be cute. But thank goodness I have some kind of discipline where, I was like, you know what? I'm not playing this game because I know guys who've been shorting the Russell from a week and a half ago or so, and they're still shorted and they're going home and it's like they're not happy. But anyway, you go to the IWM and it feels like a decade ago on Friday when I tweeted to Redler All Access that I was buying the Russell here. If you didn't buy the Russell there, you know what? You could have bought it on Monday when it gapped above the 8-day and held it. And then you could have bought it on Tuesday when it closed above the high of the year. Why would you buy the Russell closing above the high of the year? You know why? Because if you look at the spiders weren't quite there yet. Look where the spiders were, by the way. The spiders were below the highs of the year on this day. Look at the date here. The date is December 6th. So you go to the playbook. You go to my little good book that I call the good book says. Well, this closed above it. So this was a long on this day, not a short. So yesterday when the S&P broke out, why wouldn't the relative strength sector go a little bit higher? So then anyway, today, I thought maybe we'd get a little bit of a retracement, a little bit of a Red Dog reversal, and I was wrong. Okay? But you know what? And I lost money. It happens, and I'm just happy that I was thinking about shorting it for the next few days, thinking that I'll get a way out of it at some point, or just get away from it and move on. So let's go to where we were here. Okay, so this was today. Let's go to the 5-minute. Here is your 5-minute. Here's your start. So this was the high of the morning. Okay, so basically this is it right here. What was the high of the morning? If I remember correctly, it was 136.30. So you had the first initial push, came in. I got short here, and basically it went through the high of the morning, and I said, you know what? It is only 10:35. I am not going to cover it. And I'm going to break a rule here because I haven't been in 4 or 5 days of pain. I'm just going to break a rule. Meanwhile, that would have been much better to cover there. I would have lost a little bit of money, but that's the cost of doing business. You lose a little bit of money. So anyway, I added, and then right here, I got out of, I would say, a portion of it, but still was losing money. And then finally, at another high here, which was 136.85, and I think that right there was the spot where I'm like, you know what? If we get above here, I'm done. I'm not staying with this trade. Whatever, it's over. So got through here, and then I went to the gym, got stopped out, and then obviously it went another what is it, $1.50. So I could have covered up here. Who knows what I would have stayed with, or et cetera, et cetera. But anyway, in the first hour, it would have been a lot less painful just to cover at the high of the day and say, you know what, it didn't work yet. Let me try a little bit later. When would you have maybe tried a little bit later? When it broke the 8-day and the 21-day, but then still came right back up. So, at this point, you could have made a decision and said, hey, it's day 5. I'm going to stay short. I'm only in tier 1. I'm going to give it day 2. I'm going to give it a few more days and trade out of it. Or, you just covered when you had to. Because I do know there were guys right around here, okay, when we broke above this high here, broke above it, got short thinking it would get stalled out of resistance. It didn't. Gapped up, said, you know what, I'm going to wait here. It's stalling. They didn't say digesting. And then got stopped out there. And then on this rally back up, they said, it's not making new highs. Let me get short here. And now look where we are. So this move on for like 7, 8, 9 days. This is 1, 2, 3, 4, 5. Here was your first time you got a signal to actually short. Remember, traded below a prior low, and you could have made your 4 points that way without having to anticipate. But if you anticipate, you could be put out of business. If you have some kind of system to try it and get out, you could get some paper cuts and not get put out of business. But anyway, I'm babbling. That's the small caps today. Hopefully, you're on the right side, not the wrong side. where I was trying to find some longs and opportunities was the oil sector. Oil had to move to 52, came in, was strong today. Everyone knows I was trying to buy Exxon yesterday. It didn't really work for me. Today I tried it again. It didn't really work for me again. It didn't close so great, but it does seem as if it could continue to the upside. It's funny how the ones that haven't gone yet and haven't been let go are so friggin' choppy. So, yesterday it looked fine, on the chart-wise at the end of it. It's above the 8-day, above all moving averages. You would think it'd have a cleaner move. I'm still long XOM. I'm also long a little Halliburton. Halliburton, nice little bull flag. You would think that, you can get some continuation move. Here's your move up. Here's your 8-day catch-up. It could continue. We'll see. I'm in some of that. Some of the other names that people are playing, EOG, little bull flag also. A lot of these things from my note that I put in, I said you could be a buyer versus support or use a red dog reversal on the pivot, and then this way you're buying a dip versus just taking out resistance, which is hard to do, and maybe this happens. What did DVN do? I didn't even plug it in the right way. DVN. Probably all look the same. Holding the 8-day, maybe it goes. And what are some of the other ones? They all look the same. They all have these bull flags after a big move up from last week that have digested and let the 8-day catch up, and we'll see if there's continuation. I also tried today to short the Goldman Sachs, and it wasn't fun. Let's just get to the chart. Yes, look how friggin' extended this is. First of all, this was your first move. Second of all, this was your next calculated spot. And lots of times during the year, you'd have this move that if you missed, when it consolidated and built a nice flag, the next move was a rollover. So that's how strong we are, that this move actually gave you time to accumulate versus the 8-day, add above it, and then make good money. So today I tried shorting it, and I lost money. Why did I try shorting it? Because everyone was trying to short it, and I wanted to be cool. No, I thought maybe there was a chance, that it went red and it would have a retracement, and obviously it didn't happen. So I didn't short this move. I shorted here. I shorted, there. I thought I was doing well. And then it came up here. I thought there was a high, a lower high. So I added right here. So shorted, making some money. Boom. Shorted more, losing some money. And then right around 12 o'clock, I got stopped out right when it took out the morning high here. And then, the rest of the day could have been a little bit more painful. Who knows? If you're still short and it gaps down tomorrow, you're guessing. But for me, calculated-wise, upper flag looked like it was starting to, go red. I saw Wells Fargo go red. I saw JP Morgan go red. But obviously, this trend is much better to be buyable versus shorting into it. So just make sure you're not always trying to short the support on a trend. Yeah, maybe resistance you could short, maybe extensions you could short, but adding to it's not working. So anyway, here is your chart of Goldman Sachs, and wow, look at that move. Look at the 8-day moving average. Look at the 21-day moving average. What's the rule? You do not short when you're above the 8 and 21-day moving average. Maybe for a trade and try like I did today, but in general, you try and ride that trend, not fight that trend. So then you have high beta tech. Still wishy-washy. Amazon was a little weaker today, maybe because the Citi analyst took it off, exchanged it for Google. Here's your low. Here's your higher low. This was the good long we had. Feels like it was a year ago. It was actually, I think, Monday or Tuesday. We bought it here, sold it there. Yesterday, it was fine. A little day. Still, here's your 50-day. So it looks okay. What did Google do? Did Google hold up, considering... Google actually acted a little bit better for itself, for a tech stock. Still at the 50-day. It's low, higher low. Took this out, right into there. So at this point, I don't know if I would be trading Google, but it would be good to see if some things could continue. I am actually in BABA. That was a decent trade for us in the morning. I got upgraded by Morgan Stanley. Got a price target of, I think, 130. So we'll see what's next here. Maybe it tries to break this descending trend line that's controlling it. Look at the 21-day controlling it. Here, maybe it gets up here and fails, or if one time gets, reclaims it. This was the last time we actually looked at it, and I said, don't buy the earnings, sell it. They're selling all tech stocks, and boom. Whereas here, they bought it on earnings, And then this was a beautiful trade. Remember that beautiful trade? Hung out here, added to it, came in, retest, highs, and then look at this. This was the engulfing bar that changed BABA. This day in history. 10-11, they say, what happened to change your perception of BABA? Well, here, it engulfed a bull flag and lost the 8th day, got a little wishy-washy, and this day right here was the day that BABA changed, in my humble opinion. And then it hasn't seen, anything more than a bounce since. I'm long a little bit overnight, we'll see. Whatever. What else? Red Dog. Apple. I missed the Apple trade. Apple, I got to just turn the TV off. It was downgraded out the yin-yang yesterday and then reversed and now took back the moving averages. It's right at the 50-day. Looking, more constructive than not for itself. Last time we caught a good trade was right here and then right here. And then, I think on this day is when I got stopped out and, haven't really done much with it since. We'll see if this takes this out. This would probably help tech. I did have IBM today and made a little bit of money, sold it. Just doesn't look so spectacular. I had MU today. It was up, went red, sold it also. It's fine though. Just don't feel like sitting in all these longs of names that aren't so set up. But just as long as it goes sideways, could probably continue. Oh my goodness, the casinos. So I left at lunchtime to go to the gym. I think I had 6-7 positions. One of them was Win. Why did I have Win? Because Win was creating a bull-type flag that I thought would break out to the upside. That was my opinion. I was in Tier 1, not Tier 2, because I was just sitting there. I was showing relative weakness. I showed relative weakness yesterday. Today, the market was up. It wasn't up again. I figured, hey, maybe it needs to digest. So I left. The stock was 101.5. Put a stop in at the low of yesterday because if it broke below that, which it shouldn't do, I'm not going to get my breakout above 102, so I have to revisit. And then all of a sudden, come out of my spin class, and they're like, Win's down 10%. I called the trading desk. I'm like, I hope my stops are there. They're like, yes, Red Dog, you're out of Win. Thank goodness, because look what happened. So before today, it looked better. Then it looked at the end of the day, right? It looked like you had this channel here. You had a nice rally from the lower end of the channel. Was holding higher, looking like it was going to break out. This would be your area where it won't break out if it breaks below. You could use 97.40. So what did I use? I used 101, and boom. Why did I use not 101. Why did I use 100? Because this was yesterday's low. Breaks below this, why am I in it? If I'm in this for a Tier 1 here, a Tier 2 breakout there, breaks this, it's not going to happen yet. And then that happened. So I'm out of it, and thank goodness my stops are in. Otherwise, it would have been a worse day than it already was. Whatever. So respect to stops. And then lastly, Twitter. Looking pretty good. A little stealth rally, big rally yesterday, held it today. I'm long the option still from over here, and I'm in actually a little bit of stock, and we'll see if it can continue a little bit tomorrow. As far as Europe is concerned, Europe still in half my options. Bought them on Friday, tweeted it out to Redler All Access. Nice little trade above all the moving averages. Inside day today with a little bit of time, probably takes us out, and I think we could see up to here. We have about a month left on the options. I'm into I only have half because this move made me over 100%, and some people even more. I guess I should have went with this. HEDJ was a little bit more solid. It was nice and coiled, but less of a currency risk. But anyway, if you're in Europe and you took our word for it and chose whatever vehicle you did, you're doing well. So in closing, it's Thursday. It's been a heck of a week. It's been a heck of a run. A lot of people that have had opinions that acted before the market confirmed them are in trouble and hurt. A lot of people who have been in the rally that has been calculated now are getting to the point where it's like, I sold things early and it is what it is. You can't get broke booking profits. Whatever you do is you don't get on the other side of the trade to revenge it because you feel like you sold it 4 or 5 points ago. It's now, up 7 days. Why not short it? Because it goes up 10 days until you have something that shows you that it's the right thing to do. And it's December 8th. Hopefully, you read my letter. It was a year for my back surgery. It's been a long year. Lots of trials and tribulations, but overall feeling good. Really cherishing the little things. No more Ironman for me for a little while, but, healthy, sweating, feeling good, no pain. That's just fine for now. So, when life's change, you have to change. Same thing with the trade. You can go from trade performance to trade management. You got to deal with what's in front of you. And right now, All's well. So for you, December 8th, Christmas time, Hanukkah, take a deep breath and just try and make some money and don't be a hero. And I will see you on Twitter tomorrow, but not back to the morning call until Monday because I'll be trading from Short Hills. Have a good one.